Super microcomputer is under intense selling activity today. It is Monday, August 5th, and there's a big sell off in technology, and it looks like AI stocks are just getting hammered. It looks like Supermicro is going to open down 13.5% in the pre market. And previous week, the stock really came down as well. Is this a buying opportunity, or is this showing that this is a falling knife in a stock that shouldn't have been priced as high as it's currently priced? I'd like to go through and analyze the company. This is a stock that I created a video on in early June. I encourage you to take a look at that if you're interested. And at that time, I concluded that I wanted to short this stock. And therefore, that short position's done quite well. At the end of this video, I'll let you know what I intend on doing with that short position, if I'm going to close it out or continue to let it play out. Super Microcomputer is a really good business. And first, I just want to say that it's a really good company. They produce high performance servers that really fit the times. Computing of that type is in really high demand. And to all the employees of Super Micro, I think you've built a really good business. Now, the company is not the stock price, and the stock price is not the company. They're two separate things. And this video is just about the stock price. It's not about the company or the employees at Super Micro. The stock price has really gone up and created a company that has a $36 billion market cap. That's substantially higher than where it was at just a few years ago. The PE ratio is 35 for the current year. It's expected to be 19 with a very optimistic forecast. If AI purchases go down, so would that PE, or excuse me, the earnings would go down and the PE ratio would really fly up. Analysts are in love with this stock, but analysts have been kind of, doing a group think kind of activity and saying AI is going to be so big, it's going to be so valuable, that they're all kind of agreeing with themselves. But today really shows that, hey, maybe the AI hype cycle was overdone, and now this correction is going to be quite painful for many companies. The company has done a good job of growing their business, to say the least. The growth over the last couple of years has been phenomenal. The one thing I would say about this industry is this industry doesn't have very high margins. So although the growth is very impressive, the margin growth is just moderate at best. The company does produce free cash flows, which is very good. It just doesn't produce cash flow to the extent of the really valuable companies, let's say a Google or a Microsoft, companies that control their own IP. And therefore, that's one thing that is a cautionary item, is this business doesn't produce a lot of free cash because it doesn't have very high margins. The analysts, which I'm sure are going to begin to restate their forecast, think it's 68% discounted. This stock has been dropping in value, and I think their evaluations and valuations are going to change quite dramatically. The forecast is for them to produce $24.34 of earnings per share this year, which is a very good number, more than double last year. And the growth of that should be really high. I don't believe in that growth. I'm not going to use 40% or 20%. It's just much too high, especially now that economically, the economy is expected to go into recession or some type of slowdown. And I think the investing in AI is going to slow down substantially. I think businesses are going to pump the brakes on that type of capital expense. Super Micro stock just flew off the charts a couple years ago. In 2021, it was trading at mid 30s, and now it's trading upwards of $624. But after the pre-market, after it opens, it'll be at $548. That's still such an aggressive rise in the stock price. And that's what led me to really pay attention to this whole space. This is rivaled only by the dot-com era. And the dot-com era ended very painfully for many investors. Many great companies like Cisco, Intel, saw their stocks really fly up quite high, much higher than their intrinsic value. And for many years, stockholders lost substantial parts of their investment in those companies. And that's what led me to really begin to question and really play the opposite position to companies like this. Over the max chart, they're up 6,000. If we look at the 1 year, the company's still up 76%. But if you look at from the high that they achieved, which is $1,188 per share, to this point, the stock's down 47% and continues to drop. This is definitely a falling knife, and I don't think anyone wants to catch it. How desirable is the super micro business? Well, let me take a look at it and put this company in the quadrant that I believe they belong in. Now, my preference is to buy companies in the green. These are companies that have a monopoly like characteristics, like patents that prevent other competitors from selling a particular product to an industry. And that product is in high demand, or it could just be their performance or their ingenuity. Let's say a Google search. It is just so good that it is a dominant force in advertising. Supermicro doesn't possess really great IP, intellectual property, patents that prevent other companies from doing exactly what they do. They might claim to have some advantages with high performance computing, and I would give them that. I would say you probably have some advantages at this moment, but they're in an industry that's going to catch up very fast. So that advantage is only going to last for a little while, maybe a year. That said, I think Supermicro is a very good company, but the best I could do is put them in the gray, where I think the barrier of entry is really low. Their competitors are companies like Dell, Hewlett Packard, IBM. These are really good companies that have been doing hardware for a long time. And any type of advantage Supermicro has in high performance computing is going to quickly be gapped by these competitors. They're going to fill that gap very quickly. It might even leapfrog Supermicro. So the best I can do is put them in the gray, which is the type of investment where I really need a discount in order to compel me to buy into a company like this. What do I think Supermicro computer stock is worth? At this time, using the stock price that the pre-market is pricing with a big drop, I believe the stock is being oversold by 39%. It's being sold at a premium of 39%. I look at their cash flows first, and I think their cash flows are very good for a new business. And I give them a very optimistic growth trajectory of 25% in the first 4 years. And intrinsic value, I'll put at 4%. This company has shown that it's had negative cash flows in some years. But again, I want to be optimistic because I'm actually taking an opposite position on Supermicro. It is a risky business. Let's face it. It's technology, and Supermicro could be leapfrogged by one of its competitors. So I'll discount by 11%. The best intrinsic value I can get out of the cash flows I expect is close to 15 billion. I add cash and take away debt to get to an equity value of 15 billion, but the market cap is really high, and therefore it really has a high premium on that particular share price. Earnings per share is expected to be above $24 per share. I'll give them a generous 18. Hardware companies, I would usually give at best a 12 and give them a generous growth rate of 10% on that. Really nice earnings per share of 24. Again, $24 is more than double what they did the previous year. And even using those really optimistic factors, it's being priced at a premium of 12%. So combined, it's really priced at a premium still at 39%. So as mentioned at the beginning of the video, I've shorted the Supermicro stock, and I'm sitting roughly at a 30% gain, depending on where the market opens. And what should I do? Should I close out the position, just call it a win, and it'd be a really good return in less than 2 months? Or should I leave it open? I'm going to leave this short position open. I think it's probably going to be a good idea to close it out at a 40% gain. I think unless new information leads me in a different direction, I think it'll achieve that 40% gain. The momentum for selling this week is extremely high, and I think it's likely to get to that number quite quickly. I just want to caution everybody that short selling is really risky. I'm an investor in stocks, and most of the time I buy stocks and I hold for a long period of time. I shorted stocks around the AI space, around the data center build out, just because I thought stock prices were way too high. And I thought it was an opportunity to play the other side of this particular trend. And so far, I think it's beginning to really work. And I'm glad I did so. But I'm not recommending that you short Supermicro. I'm not recommending you short any stock. I'm not recommending you buy or sell Supermicro either. And just as I end the video, I just wanted to say it again. I think Supermicro is a good business. And I think the employees and the founder built a really good business. High-end computing is really in demand. I think they really built a good hardware company for the times. But again, the stock price is not the company, and the company is not the stock price. This whole video is really about the stock price and not the company. So I hope you found my video interesting, and I appreciate you watching.